The loan officer looked at me like I was trying to hide something. "There's already a mortgage in your name," she said, turning her screen toward me. "Co-borrower. Property in Mecklenburg County. Current balance, $312,480. I felt my throat go dry. "That's not possible," she scrolled. "Loan opened July 2018. It's 60 days past due." 60 days. I don't own a house in Mecklenburg County, my parents do. I left the bank with a denial letter in my hand and a copy of my credit report folded inside my purse. On page 3 was my childhood address, next to it, Vanessa Cole. Under that, co-borrower, electronic signature authorization confirmed. I hadn't signed anything, I hadn't agreed to anything. But there it was, a mortgage I never applied for, and it was behind on payments. I called my father from the parking lot. He answered like it was a normal Tuesday. "Vanessa, why is my name on your mortgage?" There was a pause. Not surprise, not confusion, just a pause. "Don't start making this into something it isn't," he said. I looked down at the balance again. $312,000. "I didn't sign anything," I said. "We needed the approval," he replied calmly. That was when I knew this wasn't a mistake, this was a decision. "Would you stay quiet if you found out your parents used your credit to keep their house?" Because I didn't. And the next document made it worse. I was always the dependable one. That's what my mother called me. Dependable meant I packed my own lunches in high school. It meant I paid for community college with 2 part-time jobs. It meant when my car transmission failed at 23, I took out a small personal loan and never mentioned it at home. My younger brother Jason was entrepreneurial. That meant when his landscaping business folded, my parents paid off the equipment lease. When his sneaker resale venture collapsed, they covered the credit cards. When he decided to flip houses in 2017, they co-signed. That flip lost them nearly $60,000. I remember my father at the kitchen table, rubbing his forehead. "We'll refinance," he said, "clean slate." In 2018, he asked me to send him my recent pay stubs. "It helps with underwriting," he explained. "Just shows family stability." I emailed them without thinking. I trusted him. That part still bothers me, the trust. 3 days after the bank denied my mortgage application, I received the official adverse action letter. Application denied due to excessive debt-to-income ratio. Existing mortgage obligation, $312,480. I spread my credit report across my dining table. Loan opened July 2018, co-borrower, Vanessa Cole and Harold Cole, payment status, 60 days late. My credit score had dropped 82 points. I hadn't missed a payment on anything, but someone had. I called the mortgage servicer listed on the report. After verifying my information, the representative confirmed it. "Yes, Miss Cole, you are listed as co-borrower. I never signed. It shows electronic authorization." "From where?" She paused. "IP address registered in Charlotte. July 12, 2018. That was my parents' address, not mine." "Send me the full loan package," I said. It arrived 4 days later, thick envelope. Refinance agreement. My name printed neatly under borrower. Income listed, $94,000. That was my salary back then, under signature. Vanessa Cole. Electronic. I flipped to the authorization page. The confirmation email wasn't mine. It was my father's old AOL address. The signature hadn't been forged by a stranger. It had been submitted from his account. If you found out your parent electronically signed your name to a 6-figure loan, would you call the police first? Or would you call them? I called him. "I have the refinance documents," I said. Silence. "We needed stronger income on paper." He replied. "You listed me as co-borrower." "Yes, that makes me legally responsible. It's our house, we've always paid. You're 60 days late." He didn't know I knew that. "It's temporary," he said quickly. "Because of Jason?" He didn't answer. Then he said something I will never forget. "We did what families do. We leaned on the strong one, not sorry, not embarrassed, just justified." "You committed loan fraud," I said evenly. "Don't use words like that." "What word would you prefer?" "It was paperwork. $312,000 paperwork." I hung up. Then I opened my bank statements, because something else was bothering me. The refinance started in July 2018. That same month, I set up a recurring transfer from my main checking account into a joint family support account my parents had access to. I remembered that conversation. "Just until things stabilize," my mother had said. The transfer was $2,050 a month. I scrolled back. July, August, September. It never stopped. 8 years. $2,050 a month. I opened my calculator. 2,050 times 96 months. $196,800. I stared at the number. Then I logged into the joint account. Incoming transfer $2,050. Outgoing payment. MTG served $2,047 every month. $3 left behind. Heard. The mortgage payment and my transfer matched almost exactly. They hadn't been paying the mortgage. I had. The only reason the loan was 60 days late now was because 3 months ago I paused my transfer. I told my mother I needed to adjust my budget while preparing to buy a condo. She said, "Do what you need to do." She never mentioned that my transfer was the mortgage. That wasn't support. That was the payment. I checked the amortization schedule. Original refinance, $355,000, current balance, $312,000, 8 years of payments and barely any principal reduced. Then I saw something else. A home equity line of credit opened in 2020, credit limit, $75,000, balance, $61,000, borrower, Harold Cole, not me. I pulled the draw history, 3 large withdrawals, $22,000, 18,500, 14,700, all transferred into an LLCO, Jason Cole Enterprises, so they used my income to qualify, used my money to pay the mortgage. Then opened another credit line to fund my brother again. I printed everything. When I confronted them at the house, no one offered coffee. My father sat at the dining table. My mother stood behind him. Jason leaned against the counter. "You could have talked to us before calling the bank," my father said. "I did talk to you. We were going to fix it." "How?" "We're transferring the house into a family trust," my mother said quickly. I almost laughed. "You can't move debt into a trust and pretend it disappears. It protects everyone," she insisted. I slid the refinance agreement across the table. "You electronically signed my name." "It was necessary," my father said. "For what?" "For Jason's expansion." Jason spoke up. "It was investment." "In what?" He didn't answer. I placed the HELOC statement on the table. "This is your expansion?" My father rubbed his forehead. "It was temporary." 8 years is not temporary. "We leaned on the strong one," he repeated. "That's your explanation? It didn't hurt you." I looked at him. My credit score dropped 82 points. I was denied my own mortgage. "I've paid nearly $200,000. Jason scoffed. "You're acting like we stole from you. You forged my signature." "Don't say that," my mother whispered. "It's accurate." "You think a few papers make you right?" my father asked. "No," I said. "They make me done. If your family used your credit and your income for years without telling you, would you keep it private or would you make it official?" I made it official. I met with a probate attorney named Linda Greer. When my parents tried to move the house into a trust, she scheduled a conference. In that room, I placed everything on the table: the refinance agreement, the IP address log, flirting, the employment verification request my father had initiated pretending to be me, 8 years of transfer statements, the HELOC trail into Jason's LLC. Linda looked at my father. "Did Vanessa authorize this refinance?" He didn't answer. "Harold," she pressed. She knew we needed help. That wasn't my question. Silence. Linda turned to me. "You funded the debt service entirely?" "Yes." She looked back at him. "Transferring this property into a trust while there is potential co-borrower fraud exposure is not advisable." That was the first time I saw fear in his eyes. Not anger, fear. I filed a civil claim. Unjust enrichment and fraudulent inducement. When the summons was delivered, my father called. "You're suing us?" "I'm protecting myself." "You're humiliating this family." "I didn't sign that loan. We gave you everything." "You gave Jason everything. You gave me responsibility." Court mediation was scheduled before trial. In that room, everything was on record: the refinance, the IP logs, employment verification request, Rose. The bank transfers totaling $196,800, the HELOC withdrawals into my brother's LLC. The mediator reviewed the file. "This is substantial," he said. "Rolam." Their attorney leaned over and whispered to my father. After a long pause, he said, "We are willing to negotiate settlement." They knew they would lose. The agreement required immediate refinance, removing my name, full reimbursement of my transfers plus partial interest, HELOC restructuring without my liability, written acknowledgement that the rest refinance had been executed without proper authorization. They had to sell the house to do it. When it sold, the equity didn't go into a trust. It went into escrow. My reimbursement was wired directly to my account before any distribution. Jason received nothing from the HELOC restructuring. The trust was redrafted with full transparency. My father hasn't spoken to me since closing. My mother sends short birthday texts. Jason blocked me. Sometimes I look at the old leather checkbook cover I gave my dad years ago when he taught me to balance an account. He used to say, always know where your money's going. I do now. If you've ever been treated like the safety net instead of the daughter, would you have taken them to court? Or walked away quietly? If this story made you think about a joint account, refinance, or a document you signed without reading closely, subscribe. Every lie leaves paperwork. I was the strong one. That didn't make me their bank.